Hello there. Welcome back to Financial Accounting at 5. This video we want to look at the preparation of the income statement, and we are also going to prepare the appropriation statement and also the note uh, to the balance sheet on the calculation of the final balances of the current account in particular. So our question reads, the information presented below is from the records of Keiko stores for the financial year ended 29 February 2016. Keiko Stores is a partnership with partners Kate and Corey. So we are given a pre-adjustment trial balance as at 29 February 2016. So you are given the debit column and the credit column, whereby we have information that we have in the pre-adjustment trial balance that you need to go through before you start to answer the question. So going beneath our pre-adjustment trial balance, you also have additional information that you are given and that you also need to go through before you attempt the question. So this is the additional information that we have. Then on the required part, first part reads complete the income and appropriation statement for the year ended 29 February 2016. And we are seeing that our question is 33 marks. Then the second part, which is 1.2, reads prepare the notes to the balance sheet for the current accounts of the partners with 17 marks. So in total, our question is 50 marks. So with what we have, we are going to start with preparation of the income statement. So we have our answer section prepared here, whereby obviously we are going to start with the figure for ourselves. So our sales figure, we go back to the information that we are given in the pre-adjustment share balance. So you would see that this is the information that we have. So in the pre-adjustment share balance, we go under the non-account section. That's where we have the figure for our sales. And obviously, you need to first check in the additional information. If you've got any adjustment information, of course, you need to have in the from the figure for sales there that should go to the income statement. So going down, we are looking for any adjustment affecting ourselves. So you go to the other additional information that you're given on the other page and try to see if you have any information that is affecting your sales. But you see that according to our information given, we do not have anything that is affecting our income statement. So in that case, we have to check the figure as it is, which is 432,210, and enter it in our answer section, whereby we are now saying sales. We have got 432,200 of sales, whereby we are saying less cost, we subtract cost of sales from sales to get our gross profit. So we go to the information given and try to see in terms of our cost of sales, we got 270,130. And we need also to see if we have any information that is affecting our cost of sales. So we can try to check this this point that we have saying during a burglary and the shop stock costing 24,000 was stolen. The insurance company is agreed to pay out an amount of 18,000 rands, but this is not yet been received. So you see that this is going to constitute a loss due to burglary. So we are going to enter it in the profit loss account, obviously under our expenses. So it's not going to affect our cost of sales. So we can just take the figure as it is, which is 270,130, and enter it in our answer section. And obviously, we are saying less, so we are going to subtract. So this is what we get from there, and from there, we can now be able to calculate our gross profit, whereby we are going to say our sales minus our cost of sales by saying 432,210 minus 270,130. And you see that the figure that you are supposed to get by subtracting there is 162 profit. So this is our gross profit. So from there, we are going to supposed to go to our expenses. So our gross profit, we can call it gross. Remember, we are supposed to check if we have any income that we have in our question, because from gross profit, we are supposed to go to other income and we add it to our gross profit. So check in our information that we're given to check if with other income that we have. So if we go there, you are going to see that the figure that we are supposed to, we have got a figure for rent income. that is also indicating other income. We got 37,000 or figures 37,200. You need to go to additional information to check if there's any adjustment that is affecting our rent income. If there, you need to first adjust it. Then the net figure that you get, you are supposed to put it now in your income statement. So if you come to this point, you are going to see that we have got information that is affecting our rent income, which is 15. The tenant is paid the rent until the end of March 2016. So this point needs us to identify our financial year, where it's starting and where it's ending. So you see that our financial year is ending at 28 February 2016. So 29 February 2016. So if you come here, you can just try to identify your financial year, whereby we are saying 2. So this is our financial year to the end of March. Okay? So we need to calculate and get the amount of rent of March 2016. We cannot be able to subtract it from the total of rent that we are given the result balances, which is 37,200 to get the net rent which is supposed to be for that period. Remember that the one from March 2016 that was received is a rent that was received in advance. So we need to subtract it so that we are left with what belongs to the financial year that we are in. So in that case, let's try to find out about the information given. We are told that the rent increased by 200 rands on 1 December 2015. So we need to count the number of months before it increased. So remember the year is starting 1 March 2015. So we are saying March. And then March, we have got April, May, June, July, August, September, October, November. So we are saying we have got 1, 2, 3, 4. Before it increased, then from February it got 4 months before it increased, and then 4 representing after it increased. So in that case, we can be able to come up with our formula. So the rent before it increased, let it be X. Let it be. We can just give any letter. We can say let rent before it. Maybe we can give it R. Let's say it's R, standing for rent amount before it increased. So since we are saying we have 9 months before, so we can just simply say 9 after it increased. We are told that it increased by 200, so we are going to add 200 to R. So we put 4 months times. If you do that, you get the total for rent that you are given there, which is 37,200. So we come here. We are going to say it's equal to 37,200. Then from there, we cannot be able to calculate in terms of the formula that we now have. So we can just say 9R, then 4 times 200, we're going to get your 800. Then we can collect like terms, whereby we're saying 4 plus R, we are going to get your 13R. And then we check 800 the other side, we are going to say 37,200 minus 800. And then we can try to calculate it from that point. So now it becomes our 200 minus 8, 400, 2,800. Rent before it increased. Remember, R is the rent before it increased. So remember, after the increase was 200. So after the increase, we are saying rent after the 800, so you're going to get an increase. And then rent before increase is 2,800. So the rent that we need to subtract is for March 2016, which is after it had increased. So we are going to subtract 3,000 from the total of rent, which is 37,200. So the other that we get becomes the net figure that we put in our income statement. So going to our answer section, we are going to say, remember here, we are going to, after our gross income, we are going to say other income. You can say before we adjust for other income. Remember here the title that we remember we are also going to calculate our gross income beneath that. So basically, let's just take note of that correction. Then our rent income, which we are going to say in brackets the total that we got there, which is 37,200 total of rents in the pre-adjustment trial balance. and then we subtract the rent after the increase of March 2016 of 3,000. So in brackets, we are saying 37,200, and then you subtract your 3,000. And then we do that, you're going to see that the total that you are going to get is the figure that you are going to get there is 34,000. After, say, 37,200 minus 3,000, and then you get your figure is 34,200. So basically, that's how we find the final figure for our rent income. Then we try to see again if we have got any other income that we have in our question. So we can just go to our pre-adjustment trial balance, whereby we have got this information that we have. Then we have identified rent income as part of other income. Then we try to see we have got also discount received here. Discount received an amount of 1,740. So obviously we need to go through the information again to see what any information that is affecting our discount received. So we can just try to go through every information that we are given. You see that we have nothing that is affecting our discount received. So you can take the figure as it is, which is 1,740, and put it in our answer section, whereby we are saying discount. Then we check if we have got any other information again that is going to be part of other income. We see that we do not have anything. So before you leave the other income section, there are two items that you have to check for that can be either under other income or under less expenses. We have got provision for bad debt adjustments. If we have it in our question, provision for bad debts adjustment, and then you also look for trading stock. Saving, we are saying these two items, depending on the information given, can fall under income section, or can also fall under the less expensive section. So before you leave the other income section, you need to check them to see where actually does those figures fall. If they fall under other income, we put them under other income. And if they don't qualify under other income, obviously they have to go to the less expensive section. So in this case, we can start by checking our provision for bad debt adjustment if we are given it in our question, and then we can be able to calculate it. So obviously we go to our additional information to see if we have got any information that is telling us about provision for bad debts. We go to the next section. We are seeing that in this case, we do not have provision for bad debts. We can go and check again in our under the balance sheet account section if you've got information about provision for bad debts adjustment. You see that we do not have it. So it means in this question, we do not have provision. So we can just leave it. So in this case, if it's there, we are saying you are supposed to identify if there is an increase or decrease of provision for bad debts, whereby you compare with the previous period level of provision for bad debts. So if it's an increase, it's an expense that has to be put under less expenses. If you identify it as a decrease, it's income, and it should be put under other income. So take note of that. Then we also check for trading stock surplus or deficit, whereby you calculate it by saying book value of trading stock minus the physical stock count figure. So in this case, if the book value is greater than the physical stock count, we are going to find it as a deficit. If obviously, if the book value is greater than the physical stock count, you're going to get it as a positive figure, and it will be a deficit, and it will be a physical stock count figure, whereby your answer, you're going to get it as a negative. It's going to be a surplus. So if it's a deficit, it has to fall under less expenses. But if it's a surplus, it has to fall under other income. So those are some of the items that you have to identify before you leave the other income section, so that you don't skip them. So in this case, now we try to see according to our calculations. So the book value, you get it in the pre-adjustment share balance, whereby we have our figure for trading stock, which is our trading inventory, which is 17,010. So we can just say 17,000, 17,010. Then go to additional information to see if there we have any adjustment that is going to affect our book value. So we can just go there and try to see what the information given. So if you come to this point, I will say during a burglary in the shop, someone is going to pay out an amount of 18,000, but this has not yet been received. So what we are concerned with is the cost amount, which is 24,000, which was stolen. So it means this is part of inventory that has gone out of the inventory that we have. So it's going to be a reduction since it was stolen. It's no longer part of our inventory. So we need to subtract it there. So we come here. We now say the book value that we have there minus 24,000. And then the physical stock count figure, you are supposed to get it in the additional information. So if you come here, you'd see that we are told that physical stock count at 29 February 2016 reviewed the following on hand. We are given trading stock is 45,210 rands. So you figure that you take is the only figure for physical for the trading stock figure, which is 45,210. So come in, we say subtract 45,210. So this is what we have. So we are saying 17,010 minus 24,000 minus 45,210. And let's calculate and see what we get there. So we are going to see that we are going to get a positive figure of 1,800. It's a deficit, so it's an expense. So it means it doesn't qualify under. It doesn't. So in that case, we have exhausted all the other income items that we have in the question. So coming here now, we are going to say we can just close there by closing the figures that we have, so that we can be able to calculate now the total for other income. So if you say 1,750 plus 34,200, it gives the total for other income, which is going to come here as 35,940. So this is what we. So here we can now be able to maybe to remove this so that we can put it a little bit down. Right, so other income, we are supposed to add it to gross profits, and then if you add it, you're going to get your gross income, which is not now supposed to be here. So we are going to say 162,080 plus 35,940, and then the total that you are supposed to get becomes 198,020. So this figure is the gross income. So this is what we have. Then from the gross income, we are supposed to go to expenses, of which we are going to subtract our expenses. So we're just going to say expenses. So in our expenses, all the expenses that we have in the question, we list them beneath. Then the total is supposed to come in line with our expense description, and it will be here. So going back to our question, we can go item by item, trying to check the expenses that we have under the nominal account section. So we can just try to go down from here, without checking for expenses. So you see that the first expense that we have identified there is our salary. But if you go to additional information, we try to find out any information about salaries, but we are told that Kate, we have got 60,000, Corey, we have got 60,000. These are the partners that we have. But obviously, remember, in a partnership, the salary, one of them obviously is supposed to be adjusted in the income statement. Then the other one, we adjust it in the appropriation statement. So that information, we can only get it in the additional information. So we go down to see where do we have information about salaries. So if you come under the partnership agreement, that's where we have it stated when allowance of 90,000 rands. So when it's an annual, it's supposed to be adjusted in the appropriation. Then when it's a monthly, Corey receives is supposed to be adjusted in the income statement under expenses. If the income 6,000 per month, to say 6,000 times 12. So if you multiply there, 6,000 plus 12, you're going to get it as 72,000. So we have 72,000 that we have. So coming to our other section, we are going to say salary. And this is salary for Corey. So in that case, you are supposed to show a calculation, but we know that the total figure that we get for the annual. So the annual figure is the one that we need. So if you come here, you see that the annual figure is 72,000. So it's the one that is supposed to come here. We have 72,000 as the annual figure, but the figure that you are given in the pre-adjustment trial balance, the figures that we are given in the presence, the actual amounts that were paid and are received. So in terms of salary, the actual amount paid for salary for Corey is 60,000. But the salary that's supposed to be for that year is 72,000. So it means the difference is not yet paid. So it's an accrual or an owing amount of salary. So it's an owing of 72,000 minus 60,000. Can provide for this 12,000, whereby we're going to say in brackets 60,000 plus what is not yet paid to get the total 72,000. So we come in. So basically, this is what we have. And then you go to our pre-adjustment trial balance and see after salary. So what we discussed. Then we've got salaries and wages. It's an expense, 34,080. So we need to go to extra information to see anything that is affecting our salaries and wages. We can go item by item, trying to identify if we have got anything that is affecting our salaries and wages. We have nothing here, so you can go to the next page to try to identify again if we have got anything that is affecting our salaries and wages. So if you go down there and see that we do not have anything that is affecting our salaries and wages. So in that case, we take the figure as it is, which is 34,080, and put it in our answer section is our salaries and wages. So we're saying salaries and wages, and the amount that we identified is 34,080. Insurance, which is 6,980. We check again additional information. If we've got anything that is affecting our insurance, but 6,980. So we come here, we say insurance. So this is the figure that we have. And then from there, we can now be able to go down to see the next one, which is stationary. Stationary, we're given it is 7,430. So what does it mean? For our stationery, we are saying the amount of 7,430 represents the actual amount of stationery that was bought. So what we need to adjust in the income statement is the amount of stationery that was used. So the one that you are given in the list of balances in the pre-adjustment trial balance represent what was paid or what was purchased in terms of our stationery. So, but we have the figure for stationery that was still remaining at the end of the period. So at the end of the period, 620 worth of stationery was still remaining. So to get the amount to say what was purchased that we have in the pre-adjustment trial balance, which is 7,430, and then you subtract 620, and the net figure that you get, it becomes what was the stationery. So in brackets, we are saying 7,400 is 6,810. So this is what we have on stationery. Then you can now be able to go after stationery. We've got water and electricity, which is 13,460. 18,460. So obviously, we also need to check if you've got anything that is affecting our water and electricity. But if you go through additional information, you're going to see that there's nothing that is affecting our water and electricity. So we're taking it as 13,460. So we come in, we say water. We have is 13,460. So after that now, we have got bad debts, which is 1,850. But if you particularly in the shop, see if we have got anything. Let's try to see our information, the other information that you are given here. Given We are given it is it runs 5% of this debt. Balance must be written off as a bad debt. So remember, what was paid, the one that is total is what was not paid is supposed to be written over 65%. So on our calculations, we are going to say 508, then we multiply by 580. So we can as well try to calculate it and see what we get there. So 65 over 100 obviously is 0.65, and then we multiply by 580. We are going to get it as 377. So your final answer that you get here is 377. So increase the amount of bad debts that we have. So you're going to say 377 plus the bad debt amount, which is 1,850. And then we get the total for bad debts. So we're going to say 1,850. Bad debts given in the pre-adjustment trouble is 377. And then the total that you are supposed to get is 2,000. From there, we get to say. So we have other expenses. Remember, we calculated for trading stock deficit that we found is 1,800, and it's an expense. We are supposed to put it under expense again. So we are also going to summarize this working. We are going to say 17,010 minus 24,000 minus the other amount is 45,210. I think some figures are now missing. 45,210. So just summarize making. Then we put 1,800. 1,800 in. We are going to say 70. We can just refer back to our calculation. 70,010. 70,010, and then we can just try to identify in terms of the figure that we have for trading stock. Please trading inventory 71,010. Sorry, 71,010. The figure was supposed to be 71,010. 71,010, and then we subtract 4,000, subtract 5,210. So we come here, we say 71,010, and then we subtract our 24,000. And then obviously the answer that we get, we can just maybe summarize it all in brackets, whereby we can also subtract the final figure that we have, which is 45,210. So this is the calculation that we have here, that we have just summarized in the answer section. And then the answer that we got, remember, is 1,800. So basically, this is what we have. And then any other expense that we also need to include. Remember, we do not have provision. So we can check for depreciation. It's another expense that won't be stated in our pre-adjustment trial balance. You won't see it here, depreciation, but it will be stated in the additional information. So depreciation is stated here, whereby it's saying depreciation on equipment of 12,406. 12,406. So we come here, we say depreciation, whereby we are saying we can just straight away put the figure there by saying 12,406. And then we also check for interest on loan. Remember, for our partnership, interest on loan, we adjust it under less expenses. So we check for our interest on loan. You see, we do not have any interest on loan that is stated here. But if you go to information given here, you'll see that we have something that can lead us to the calculation for interest on loan, whereby you're saying we're given loan amount of partner call 4%. And the total of loan is 68,000. You're given here. So we can just maybe try to indicate it. So what does it mean? It means we have got an interest of 12% on 68,000. But we need to see additional information if you've got any information about interest on loan. We go there, try to find out about interest on loan. If you come here, you see that we have something about loan. The loan. So it means we have to calculate the interest on loan in two parts, and then we calculate, we get to get the total. So let's count the number of months. We now know that our year starts 1 March 2015. to 29 February 2000 on 31 July. So it's May, June, and then the of July. We got 1, 2, 3 months before it was reduced. And then after it was reduced August to 29 February the following year, December, January, February. So we have 1, 2, 3, 4, 5, 6, 7. 7 months after it was reduced. So we're going to calculate the two interest on loans, and that is before it was reduced and after. Then the figure that we are given here of loan is 68,000. It is the balance at 29 February 2016. So this is at the end of the year. So it was after it was decreased. So this is the balance that is going to apply after a decrease. So we can start with that one. So we can say 68,000. So we are now saying our interest is 12%, remember? 12%. So we're saying 12 over 100. And then we multiply by the number of months after every over 12. So we can just try to calculate it and see the figure that we get. So let's try to calculate it. Also, our 12% is going to be 0.12, and then you multiply by 68,000. The answer that you get, you multiply by 7 over 12. So you are going to see that the figure that you are going to get is 4,760. So this is after it decreased. So this is the figure after the decrease of 5,000. So before the decrease was 68,000. It was 68,000 plus 12,000. So you're going to get it as 7 by 73,000, and then you multiply by the number of months before decrease, which is we got 5 months. So we multiply by 5 over 12. So we can just try to calculate it. Whereby I say 0.12 is on 12% times 73,000, and then you multiply by 5 over 12. And then the answer that you're going to get is 3,650. So these are the two interest on loans that we calculated for the two periods. So total, we are going to say 4,760 plus 3,650 to get the total. So we get to go to our other section. We say interest on loan, and then in brackets we summarize the working, whereby we are again saying 3,650 plus 4,760. And then we get the total of 8,410. So this becomes the total that we have. Then we can try to see if we have got any other expense that needs to be included there. So still looking for an additional expense that we have. If you come in, you'd see that it is during a burglary at the shop, stock costing 24,000 rands was stolen. The insurance company has agreed to pay out an amount of 18,000, but this has not yet been received. So basically, we are saying what was stolen is 20. So the difference becomes the loss on that was incurred. Difference that you are going to get is 6,000. That is going to represent our loss due to 24,000 minus 18,000. So we come here. We say loss due to burglary. Loss due to burglary. Whereby in brackets, we are going to say our 24,000, 6,000. That is representing our loss due to burglary. So this becomes the last expense that we have. So from our total expenses, we are supposed to add all the figures that we have from our 6,000 going up. We add everything up to 72,000. And we are going to see that the total that we are supposed to get is 164,173. 164,173, and we are going to subtract it from the figure for our gross income. So we're going to say 198,920 minus 164,173. And the figure that you get becomes your net profit, which is going to supposed to come in is 33,847. So then we can as well try to maybe close it. And this becomes our final figure. And we are saying, since we got a positive figure here, it becomes net profit. So if you got a negative figure, we are supposed to leave it in brackets and we call it net loss. So basically, this is the final figure that we have for our income statement. So on the second part of our question, it requires us to prepare the appropriation still on 1.1 appropriation statement. So for appropriation, we also have it prepared now other section whereby we have the appropriation statement for the year ended 29th February 2016. And remember, we've got two partners, which is Kate and Corey. So the figure that we are supposed to start with there, we can go back to remember, we are supposed to use the figure that we got as our net profit, which is 33,847. So we can just start by putting our interest on capital. So all the interest on capital, interest on current, our salary, our current accounts, we are supposed to apportion them using the figure for net profit that we got here, which is 33,847. So here we are going to start by saying interest on capital, whereby if you go to the partnership agreement, remember, in the partnership agreement, that's where we have all stated in terms of our interest on capital, interest on current. So if you come here on this point, we've been told that interest on capital is calculated 8% per annum on capital balance. So we go there using 8%. Our capital balances, we've got 264,000. This is for Kate. So we are saying 264,000 times 8%, which is 0.08. Then do the same thing. So we can start by calculating for Kate, whereby saying 264,000 times 0.08. So we can just try to calculate it. 264,000 times 0.08. And you are going to get 21,120 is your interest on capital. And then we calculate again on the second part. Remember, this is 0.08 is our interest on capital. So we're going to say 176,000. And then we multiply by 0.08. And we are going to get it as 14,080. We are going to get it as 14,080. Let's try to correct this figure by saying 264,000 times 0.08. The figure that we got is 21,120. And obviously, we have a section whereby we are supposed to add the two. So if we add the two, we're going to get it as 35,200. So this is exactly how we're going to summarize it in our other section, whereby saying for Kate, we got 21,000 and 80, we add the two, the total that we got was 35,200. So this is what we have. And obviously from there, we are supposed to check our interest on current. Current accounts will be levied at 7.5%. At 7.5 over 100 as a decimal, it becomes 0.075. So we're going to multiply by a factor of 0.075. So we come in, we check in terms of our current account balances. We have it current year. So for our Kate, we say 7,880 times 0.0200 times 0.075. So remember, if it's a debit balance, if the current account is a debit balance, like in the case of Kate, it means our interest on current is supposed to be a negative figure. 0.075, you are going to get it as 591. It's a credit balance, so you can show it as a positive. We say 10,200 times 0.065. And then we got a column for total, whereby we are going to say negative 591 plus is a positive. So this is how we are going to indicate it in our answer section. Whereby we're going to say here 500 and 591 is a negative, and then calculations. So this is what we have in terms of our interest on current. Then from there, we are supposed to go to check in terms of our salary. Remember, we put in an annual salary that is supposed to be adjusted in the appropriation. So if you come in, Kate is entitled to an annual salary of 90,000. So this 90,000 is a figure that's supposed to go to appropriation. So if we take only the annual salary, remember the monthly one we adjusted in the income statement. So we take 90,000 salary for Kate. So 90,000 salary under Kate, then we put our 90,000. So we are going to put it as a positive, and then obviously here we don't it for call. So total becomes 90,000. Then from there, we are supposed to share of profits. So here we're supposed to give our share of profits, which we are supposed to indicate as, remember the balance is the share of profit. It's going to be share of profit or share of loss. So in this case, it's going to be share of loss. So we haven't done that now. Remember, we are saying all our calculations in the appropriation statement starts from the figure that we get here for net profit or net loss. So in this case, we've got net profit of 33,847. So we're supposed to put it here. So we can just leave space for the share of loss or under the current account. Then from there, we say now the figure for net profit, we got it as 33,847. We get it by saying 33,847 minus 35,200 minus 174 minus 90,000. Then we get a net figure of negative 91,527, which is now going to be shared between Kate and Cole. So we go to the profit sharing ratio. Here saying the remaining profit or loss. So remember saying remaining profit or loss. So in this case, it's a loss because it's a negative figure. It's distributed in the ratio 2:1. So between Kate and Cole. So this is how we're going to share it. So it means for Kate, the total is going to be 2 plus 1, which is 3. So denominator is going to be 3. So we say 3, and then the share is 2. So then 2 over 3. Then for Corey, we are given it as total remains the same as 3, but the denominator becomes 1 for Corey, so it's 1 over 3. And then we multiply by the figure that we are sharing, which is 91,527. 91,527. So this is how we are going to calculate. So having found that now, it means our final figures. Okay, if you say 2 over 3 times 91,527, you're going to get it as 61,080. And then for Corey, 1 over 3 times 91,527, you're going to get it as 30,509. So basically, this is what we have. So these are the figures that we are just going to put there, but we are going to put them as negative figures, as in brackets, since it's a share of loss. Remember, as you here also, we are supposed to indicate them in brackets, whereby the say Kate, we got it as 61,080 in brackets. And then for Corey, we got it as 30,509. So basically, this is what we have. So we have completed our appropriation account. So we can proceed to the last part of our question, which is now on the preparation, prepare the notes to the balance sheet for the current accounts of the partner. So we have our note to the balance sheet for current accounts of partners, whereby we are preparing using the current account balances. So we're going to start with the balance at the beginning of the current account. So we are saying balance at the beginning. So we come here, we see that the current account, we have it here. And we can see that for the current accounts, we have it here. The balance at the beginning for Kate is 7,880 as a debit balance, which we obviously show it as in brackets as a negative figure. Since we are saying a debit balance of a current account is shown as a negative, then for Corey, we have got 10,200, which we are supposed to show as a positive. So we come here, we are saying for Kate, 7,880 as a negative, and then for Corey, we show it as a positive as 10,200. So this is what we have. Then from there, we are supposed to adjust our interest on capital. Interest on on capital, which we are supposed to end. Remember, interest on capital is supposed to be on the credit side of the current account. So what is on the credit side, we should show them as a positive. So we calculated interest on capital here 21,120 for Kate, and then 14,080 for Corey. So we can just repeat as it is, whereby we're saying 21,120. And then for Corey, we got it as 14,080. Then from there, we go to interest on current. Interest on current accounts. We got them again, we compare those figures. Interest on current, we got 765, sorry, is a positive. Then we come here, we show them as it is, whereby we're saying 591 is a negative, and then we have 765 is a positive. Then from there, we are going to our interest on loan. Remember, we also calculated interest on loan. Interest on loan. We try to see in terms of our interest on loan. We calculate it as 8,410, and we try to see what it belonged to who in terms of our loan. You go to the information given, you see that loan is for partner Corey. So the figure that we have for loan, which is 8,410, should be under Corey. So we come here, we put it under Corey as 8,110. And then from there, we check in terms of our salaries. Then for our salaries, we are only going to include the part of the salary that haven't been paid. Let's just take note of that. The part of the salary that has not been paid. So we start with our Kate. We know that Kate's salary is 90,000. That's the salary for the period, 90,000. But what was only paid, we get it here for Kate, it was only 60,000. So we are saying 90,000 for the period for salary for Kate, minus what was paid, which is 60,000, non-account section. So we subtract, go to current, the part that is not yet paid. So we come in, we say salary for Kate, we got 30,000. Then for Corey it's supposed to be here for Corey salary. The salary for Corey is supposed to be 72,000. And what was paid is only 60,000. So what was not paid is 12,000. So what was not paid, 12,000, is the one that we put under current. So here we adjust for 12,000. Basically, this is what we have. And then we also have to include our drawings. And our drawings amounts, we get it in the pre-adjustment share balance. Drawings for Kate, 6,880. And drawings for Corey, 90,310. So we show them as negative figures. Remember, drawings should appear on the debit side of the current account. So everything that comes on the debit side, in the current account, we show them as a negative. So drawings for Kate, 6,880. Then drawings for Corey, 19,310. And then over the sides. Then we have got the amounts that are coming from appropriation. On the share of loss according to this person, it was a loss. So here we come here. We see that we've got the amounts that are coming from appropriation. We have got under Kate 61,080. Under Corey, we've got 10,509. So those are the amounts that we are supposed to put here. So we are saying under Kate 61,080. And then under Corey, we have got 10,000. 10,000, we just check here in terms of the actual amount, 509. So this becomes the correct figures that we. Remember, the figures from appropriations These ones, they came as a share of losses since they are negatives. So it means also here we are supposed to indicate them as negatives. You can just take note of that. So this is our to be, and then we can now cross so that we can find our figures. Whereby we are saying a negative 7,880 plus 21,120 minus 591 plus 30,000 minus 16,880 minus 61,080. The final figure that we are supposed to get there, it is going to be the balance at the end. It's a negative 25,149, which is a negative figure. So the same applies to the second column, Manakori, 10,200 plus 40,080 plus 765 plus 8,410 plus 12,000 minus 19,310 minus 30,509. You get your answer is a negative 4,000, a negative figure. So this is now our final balances for the current, whereby I say balance at the end. So the description that we have here is balance at the end. So basically that's what we have. Here's our final balance, which is balance at the end. So this is the final balance of the current account. So we are saying this is final balance to the balance sheet. And obviously it's going to be under owner's equity, and we transfer them there. So this is what you guys are according to our question. And this is a typical examination question. So hopefully the video was helpful. And please, let's not forget to subscribe and share to our channel. Let's not forget to share the link to our colleagues who are doing financial accounting and 5. Let's take note, more typical examination questions will be uploaded on this channel. So let's stay tuned. Let's meet again in the next video. Yes, for this video, I'm signing out.